Hello, this is Steve Malone with Compass FX. Hope you're doing well today and again some good trades. For those clients of Compass FX who have Advanced Synergy or Synergy Pro, I'm going to give you a trading tip today. Something to look for, 3 different components that come together that show a high probable trade in the direction of the trend. Now, I've heard from some of you who've been asking me, you've spent a lot of time talking about Dot's Guppy method here lately, but are you still trading Synergy or not? Absolutely. I will continue trading the Synergy model because it's part of my everyday trading that I do. However, the Dots method has been very helpful for a number of traders because it shows where to enter and where to exit based upon the session that you're trading. So for those of y'all not familiar with the Dots method, go over to www.compassfx.com/dots. And maybe for those of y'all who are not familiar with Synergy, it's been a model that I've been using for years. Go over to www.compassfx.com/synergy to download the free model of Synergy. Now, again, for those of y'all who have the Advanced Synergy and Synergy Pro, let me show you a specific setup that I look for, and we had a number of these setups happen over the last few days, especially when the market gets range bound. And this is what you're going to look for. You're going to look at the dynamic support resistance, you're going to look at Traders Dynamic Index, and you're going to look for volatility in the market. And this is the lineup that we're looking for. Now, to trade long, what we're going to look for is a break, the price break and close beyond the dynamic resistance line for going long. This dynamic resistance. We want to see the Traders Dynamic Index, green over red over yellow, moving to the upside. And we want to see the volatility making it move up. That's the energy in the marketplace. So again, when you have the price breaking resistance, typically to break resistance, you've got to have some good momentum, some good energy in the marketplace to continue going that way. Then follow some of the other trading tips I've shared in the past about where to determine the exit on that break, or for those of you who have Synergy Pro, look for the algorithm to give you levels to potentially reach as the trade is progressing up. Not only did we have this happen once today, we had it happen twice in the dollar Swiss 15-minute chart. You see this push to the upside. It went up pretty high, then it closed. And that's something we're going to be looking for, is to close on the other side of resistance with continued direction and continued energy in that direction. Okay? Let's take a look at the pound dollar. We had this happen twice on the pound dollar today during the Asian session. It was bounced along. See how tight, how range bound the market is right here? You can see that. Just range bound. Then we break and we close right below that dynamic support. This is dynamic support. We break it, we close below it, and then the very next bar we're seeing the direction. That's exactly what we want to see in the Traders Dynamic Index. And again, rising volatility. The market's putting on the gas. Not only did this happen once, but it happened twice today. Again, look at this lineup. We get the break. This occurs right here. And it did bounce up a little bit high, but again, we get the push to the downside. That's the look. Now, in this case, not as good as over here because the green is above the yellow line, but still green-red situation pointing down with volatility. Now, you'll find this on different time frames, just not on the 15-minute. You're going to find it on all the various time frames. Let me show you an hourly chart. Here we have on the hourly chart of the Euro Yen. See how tight the market was? Just range bound, range bound, range bound this whole time. And then all of a sudden we get this boost. Now, the only thing I'm not real crazy about here is the fact that the Traders Dynamic Index is above the 68 level. There's a possibility that you're overextended here. However, you're not overextended on a long run. The market's been very tight and slightly grinding higher. Then we finally get that punch that we're looking for in the marketplace, and we get the follow through. Good volatility. This is